First, I want to wish everyone a good afternoon and welcome to today's webinar. Again, it is entitled Driving Portfolio Operating Excellence Through Financial and Performance Reporting. We are thrilled to have you join us for this insightful session, originally hosted on May 29th, 2025. First, a couple of housekeeping items. This session is being recorded and will be made available for you in 2 to 3 business days. The chat function has been turned off. Please submit your questions throughout the program using the Q&A button. We will not accept live or vocalized questions, so please do not use the raise hand function. And we will answer questions at the end of the presentation, time permitting. So in today's dynamic investment environment, achieving operating excellence for portfolio companies through robust financial and performance reporting is essential for success now more than ever. The goal of today's session is to share strategies today that will empower you to elevate your process and outcomes, driving higher valuations and exits. We are privileged to have 2 distinguished speakers who are leaders in their field, bringing unparalleled expertise to this topic. First, let me introduce Jonathan Balkin, co-founder and executive director of Alpha Alternatives, a leading global consultancy specializing in technology and operations solutions for the alternative investment sector. With a deep understanding of private markets, including private equity, debt, and real estate, Jonathan has driven transformative projects that enable data management, workflow, controls, and transparency for global asset managers. His innovative approach to technology solutions makes him an ideal voice to guide us through optimizing portfolio operations. Next, we have Arthy Kumar, who is the industry principal for financial services at Workiva, where she brings her 25+ years of experience in financial services to lead strategy and thought leadership for the investments industry. She works with a cross-functional team to help develop and successfully launch reporting solutions for the asset management industry. Prior to joining Workiva in 2012, Arthy spent 14 years at Vanguard and MetLife. Arthy brings a rare combination of deep domain expertise, operational insight, and innovation-driven thinking. She is a recognized voice on topics like financial transformation, fund reporting, and the regulatory landscape of the asset management industry. She's a certified financial planner and chartered financial consultant. And Arthy is a frequent speaker at industry events and an active contributor to conversations on the future of technology and financial services. Together, Jonathan and Arthy will explore cutting-edge strategies to enhance financial and performance reporting, offering practical solutions to streamline processes, ensure compliance, and maximize efficiency in portfolio management. So let's go ahead and get started. Please join me in welcoming our first speaker, Jonathan Balkin. Jonathan, take it away. You're on mute, my friend.
Much better this way, huh? Thank you. So when we talk about portfolio company reporting, I think there's a few elements to set the stage. One, we want to touch upon working with a specific portfolio company to help them really get a handle on their data and reporting within each individual portfolio company. Then there is this process of the portfolio company submitting data up to the private equity fund so that the funds have the data that they need to do their own forecasting, planning, value creation initiatives, and really just measuring and monitoring the status of each portfolio company and making sure they are operating effectively or coming up with a mitigation plan to get them back on track. And then there is also the reporting concept of a private equity fund aggregating the data of all of their portfolio companies and preparing reports for their LPs and internal stakeholders of the like. And so I think when we sort of unpack all those different nuances, the scope of work is quite broad. But as a whole, that whole exercise is really critical for GPs to prepare reporting that they need to do for their stakeholders. And so, with sort of the innovation of new funds these days, more open-ended evergreen funds, we are seeing a monthly reporting cycle. And some of those reporting cycles are getting shorter. Historically, a lot of the funds operated on a 45-day reporting cycle on a quarterly basis. However, now we're seeing that shrink to a monthly basis in about 10 to 15 days. So reporting timelines are getting much more condensed. And then furthermore, we're seeing a lot more need for standardization to be able to consolidate data and come up with overall trends, and then also use AI to come up with analytics, ChatGPT to create new use cases on how to leverage that data. And without standardization, you really don't have the ability to capitalize on newer technologies. We could also think about exit preparation. As companies are going through a due diligence cycle to prepare for an exit, having a good, clean data set that can be coupled across various different domains, like a CRM, an accounting system, and an invoicing billing system, having that data consolidated can be really important for an exit plan. From my perspective, with starting Lion Point, we did an exit to Blackstone, and then we sold to Alpha, and then Alpha was sold to Bridgepoint. And so I've been part of this journey several times. And so as these firms have done their due diligence on me and Lion Point, I could tell you that we did not have a platform like Workiva, and there was a lot of brain damage that we had to go through to take data from Salesforce, take it from Sage Intacct, and take it from our HR system to really create the analytics that people wanted to see. And there was always more and more questions. And so the quicker you can respond to those questions, the better the data can be stitched together efficiently, demonstrates control and confidence in your business and of the forward-looking projections that oftentimes are required for these discussions. Historically, a lot of people are using Excel for this. So to extract data from all of these systems and consolidate it together is a really big technology limitation that unless you have a robust data warehouse, an integration layer, a data strategy, and then a reporting layer to bring this data into a consumable platform for external stakeholders, you're really just limited to a PowerPoint and Excel type medium. In addition, once you have your data consolidated, preparing a forecast and doing performance reporting is a big endeavor. And again, having Excel as your medium really limits the ability for others to come in and contribute to a forecast, create different cuts of that forecast in different scenarios. So there's a lot of challenges that we see when trying to operate on a disconnected and manual type of landscape. And then finally, there's a lot of regulatory and compliance requirements when thinking about all the data that needs to be submitted, depending on the type of organization that you are, and getting prepared for this type of journey. So there's a lot of nuances here that are really driving the need for a more robust platform to do reporting at the portfolio company level, be able to collect and aggregate that data and do your own reporting at the GP fund level. So in order to, we can move to the next slide. So some of the keys to success that we typically see would be really focused on this centralized reporting platform. And maybe I'd look to Arthy to really comment a little bit on how do you guys think about the disparate solutions and where Workiva would sit in that landscape.
Absolutely. Thank you, Jonathan. Great to be here. And as you hit the nail on the head, there are the PortCos level reporting. There's a lot of KPIs. There's a lot of point, solutions or tech stack, both at the PortCos level and then rolling up to a fund where there are different systems of record. There's different data sources that's structured, that's unstructured. Lots come in, massive spreadsheets. But at the end of the day, there are several pieces of data that come. And this is where we see companies, struggling to get it all into a centralized place because the data is all over. And of course, then to analyze the data and then to put it all together. And then there's multiple teams that are receiving this also. And this is really where, Workiva, comes into play, where we can bring all that to a centralized point. So we see that struggle. We see the large tech stack. We see a lot of the roll-ups and multiple teams needing to work on this to get it to the end state of reporting. So it is very imperative to kind of have like a single source of truth, and Workiva comes right there in that picture.
Yeah, one of the biggest challenges that we hear from our clients is we can have the best solution in the world, but the data quality is our biggest challenge. And so being able to have a centralized place that everyone is sort of coalescing around allowed people to confirm that the data is correct and normalized. Oftentimes, the reporting responsibility is distributed across so many different parties that when it comes to a consolidated place in Excel, there are so many opportunities and room for error. And as people think about a firm, thinking about what type of metrics do they want to collect, a big piece of the puzzle is coming up with a standard set of KPIs that the organization wants to collect and monitor. So we believe that there should be a set of standardized KPIs that's sort of generic to every company, but then allowing for specialization because each company might have a nuance and the type of data you're looking to collect might be very reflective on how well that company is performing. If you have a manufacturing company versus a software SaaS company, there are going to be a lot of different KPIs that are used to measure the health. But when you can create standardizations, it allows you to benchmark the companies against each other and also leverage third-party data sets to be able to assess how well your companies are performing across the industry, especially in a world like today where there are so many macroeconomic events coming up. Trying to assess whether the companies are going through an individual company issue or there's a systemic industry issue and your company is actually at par or doing above and beyond. But again, you can't really do that unless you're being thoughtful and creating some standardization with intention across all the portfolio companies in your organization or in the funds. In addition, in connection with that, a big goal is this automated data collection and reporting process from the portfolio companies. So, we work with a host of clients and we see clients on two ends of the spectrum. One is we want to be a really great partner and we don't want to put an additional burden on the portfolio companies and make them fill out this big template. And then other side of the spectrum, they say, well, we own them. We can sort of ask them to do whatever we want. And so if we just give them a template, they'll fill it out. At the end of the day, I think both sides of the coin are fair. I mean, somewhere in the middle is probably where we typically advise our clients to land. And such that, when you try to be too kind to clients, this is sort of the mentality that you have. It's like, no, we don't want to put that burden. But what happens in reality is oftentimes they say, you give us whatever you want, and they'll provide a board deck and some financial packs that they'll send to you. But then you might have your ESG team, your compliance team, your headcount or compensation team pinging different people at the portfolio company 15, 20 times per quarter with random disparate data requests. And that actually creates more of a burden. So you're better off being thoughtful and intentional, creating a single financial reporting pack that you can request from them. And then they can spend the time to prepare that once and then push a button and have that data be collected, aggregated, reviewed, and submitted off to you in a recurring, repeatable basis. And so that's where like a platform like Workiva really comes in to be able to orchestrate that layer for the individual portfolio company. They can collect the data sources, the data sets from all the different sources. They can stitch it together. They have one place to do their review and approvals, and then they can submit that off to the GP. And it makes it really easy to do when you're doing it once and intentionally versus individually. And that's where that data quality and accuracy comes into play. If you can come up with a repeatable process where you're pulling data from the same data sources and you're reviewing the same thing quarter over quarter, you can build in data quality checks into your process and have confidence that it's working. as opposed to individuals pulling data in a very haphazard, erratic, with short timelines fashion. And then ESG has been a really hot topic for a lot of companies today, maybe a little bit more so over in Europe, UK these days than in North America. But in various ways, ESG reporting is a very common requirement for us. And so weaving that into your reporting framework is a key requirement that we're seeing focused on this reporting solution. There are specific ESG platforms, but again, a lot of the data becomes redundant when you're thinking about headcount, demographics, office location, spend on travel, and other aspects that are affecting ESG. And so it does create redundancy by having a separate ESG solution. And that's why baking that into a single reporting platform allows you to be really efficient and thoughtful on the data you collect and the process in which you structure that data and reporting framework. Furthermore, when it comes to this holistic reporting platform, a key success area is just communication and collaboration. Right now, a lot of people leverage Excel spreadsheets, email, writing on a piece of paper. There's email back asking for insight into specific numbers, like where does this number come from? Can you please give me the detail behind it? And it is a really inefficient process. With a platform like Workiva, you can allow the individuals reviewing the data to really double click into the numbers, see the backup behind it, see the individual transactions that are causing it, and then they can input notes directly in and create a workflow. So there's an approver, there's a reviewer, there's a preparer, then a reviewer, then an approver that is each going through the process, and it's really well orchestrated. So if you have 20 legal entities, 30 portfolio companies, 30 sets of financials, you can set up an entire dashboard that can give you a holistic view of what step in the process each deliverable is at. And you can also start having some really great management information on how long things are taking to do each step, where the bottlenecks are, and how to create efficiency in your process. But you can't really do that until you have a really great workflow and collaboration tool to understand what process and what steps is going on in the platform. And so when people think about reporting, a key step is oftentimes everything that's happened from today and in the past. And there's very little solutions or focus on the future. And a lot of what we want to do, especially with private equity funds, is be able to take where we are, where we've been, but more importantly, where are we going? What are our forward-looking metrics to help us have confidence and clarity that the portfolio company is on the path to meet their goals and objectives? And when you have a fund or you have a portfolio company that has a 3, 5, 7-year timeline, the clock is ticking for you to hit your organizational goals and objectives. And the longer you wait to really have that clarity and confidence that, the forward-looking trends are in a place that can hit your targets, the more proactive you can be in managing those portfolio companies. It's always great when you sort of get a presentation, you see their backward-looking numbers, and then they tell you a really great story about how we're doing a lot of marketing, we're putting new salespeople on the team. And it's really hard to measure those qualitative stories with quantitative metrics unless you can really pull that data out in a consistent, organized way and then layer it into your historical data to then create a bull-bear base forecast for where the organization is going. And crystallizing that data to easily measure, here's where you told me you were going last quarter, here's where you actually went. And those are sort of key steps that we see in effectively managing a value creation plan and a portfolio company reporting pack and overall relationship between the GP and the portfolio company. And then, as I mentioned, when you have your data in a really good place and you've got a really good foundation of your data, of your financials, of your accounts, of your EBITDA, of your gross profit, of your net income, all those metrics are really key metrics. And oftentimes you'll see as part of a due diligence process, they're going to want to double click into, gross profit for a particular client or a deal or a division or a partner. And being able to have the data to slice and dice all of your information into that level of detail to support the thousands of questions and ways that people are going to want to dissect your business into all the different ratios that are required to assess and look for weaknesses is key. And we've seen that portfolio companies legitimately will either be too slow to respond, and that reduces the confidence that they have, or they piece together various spreadsheets and reports manually. And when you sort of ask for the same cut of data, or the same data just cut differently, and they don't reconcile and the stories don't make sense, it creates a lot of negative sentiment and concerns that everything that you've prepared and given is BS. And so there's a lot of legitimacy to having a really great foundation of data and information and be able to prepare that efficiently so that you are demonstrating control of your information, of the organization, and your data is telling a consistent story across the firm. And so these sort of platforms require an investment, a conscious decision on a data strategy, on a solution. Therefore, to really be able to invest in everything here to make it a really successful platform across the organization.
Thank you, Jonathan. Just adding, to kind of wrap up on the success metrics and the pillars. I mean, it does go right across from top to bottom here, starting with the data collection, having standardized templates to be able to collect all that so that, the data is live. And I think one of the things we see as we go through this whole process is, no longer is it just reporting out static measures. I think portfolio companies and private equity funds, they're all looking at real-time data, being able to, look at value, look at growth, look at risks to be able to make decisions. And that's where having all these pillars and having a system and technology to be able to do that becomes more and more increasingly important.
So when we think about portfolio monitoring, this is a little bit more specific to a portfolio company. And so we work with individual portfolio companies, and then we work with the funds to help support their portfolio monitoring process. But as firms acquire a portfolio company, oftentimes during their due diligence, they will come up with a set of initiatives and value creation initiatives that they need to do over time. And a lot of that includes a technology investment. Since a lot of portfolio companies are quite small, they might just be leveraging QuickBooks or even third-party support. So we typically recommend that a private equity fund has a portfolio monitoring assessment and then a reporting framework. So here is our playbook for how we think each portfolio company should set themselves up with reporting. Doesn't have to be a specific tool perspective, but here are the guiding principles that create successful reporting at a portfolio company. And then creating that ongoing process to be able to produce reports in a consistent fashion that ultimately then will create a foundation for all the data that you will need to run your value creation and portfolio management function for a company will certainly be the exact same pieces of information that will support your exit. And in a little bit, we'll go into the various types of exit, whether you're exiting to a strategic, or you're exiting to another private equity fund, or more importantly in this context, if you're going to be exiting to the IPO world. And different reporting solutions might have a different exit, might have a really material impact on the reporting solution that you select. But ultimately, getting into this automated reporting platform, you need to assess and create a strategy. Assess the different data sets that you have. Oftentimes, there's going to be a CRM platform, that's going to track all of your clients, all of your your pipeline and your sales and your opportunities. And then there might be a formal accounting system, and then there might be a billing system. And so there is oftentimes a big difference between sales and revenue, and being able to track those different metrics and also track it down to an employee level. Maybe there's an employee that is doing the sale versus managing the relationship there forward. And so bringing all these different data sets together and coming up with a strategy behind it is key. Next, we want to create a data mapping and standardization exercise. There is oftentimes a big difference between how things are categorized between systems. Again, you might have a CRM platform like Marketo, HubSpot, or Salesforce, and what you call a client might be very different from what you call a client in your billing and accounting system, because there might be a legal name versus the common name. So there needs to be a data mapping and standardization between solutions so that they can be aggregated and consolidated in an efficient, automated way. Either you can make those adjustments in those systems to make things consistent, or you can get a tool that can do that consolidation and mapping for you. And then you think through your technology layers. The technology could vary. We'll go into that in a little bit, but sometimes you might need a data warehouse, you might want an integration layer, and then you might need a reporting layer. And so once you figure out your core technology foundation, then you can take the data, extract it from each of the source systems, you can move it into a centralized location, and then you can produce a report for all the different stakeholders that are required. Again, I think when we talk about reporting, we're talking about internal sort of board decks, internal business unit level information, formal financial statements, data submission templates to a portfolio company, all different aspects of reports we are talking about here. When you have that foundation of your data of, again, like where you are today versus the rearview mirror, where you've been, sort of the facts of the organization, then you can start planning for the future. Creating a standardized process for each of your business units to forecast out their account plans for each of their large accounts, or revenue by a business unit, forecasting out expenses that are coming up in the quarter or the month, so that you can do your accruals and your forecasts. And you can start implementing a solution for that, either Workiva or other type of FP&A platforms. But all of this sort of standardized data collection, reporting, normalization would really help enhance the forecast and the process to allow you to do a forecast more frequently than once or twice a year. And trying to get to a more frequent process that is not so laborious and heavy on the organization is a key goal that people are trying to get more efficient. And then finally, we get to business intelligence and analytics. They say that like 80% of a team's time today is really focused on all of this Excel copy paste gymnastics that's occurring between systems. People are really spending a lot of time on extracting the data, copying and pasting it into Excel, updating the formulas to make sure everything foots and rolls forward correctly, reconciling between data sets. And there is not a lot of sort of brain power spent on analyzing the data, analyzing what does it mean? Where are our areas of weakness? What are our opportunities? And so once we can, get all that data together, get it centralized, we can then think about more advanced analytics for the organization. A lot of these initiatives are not, a lot of our clients have really built their teams to produce these reports. And that is the capacity that they have, is to really manufacture and produce the reporting requirements that exist. And there's not a lot of time available for the advanced analysis and interpretation of the results. And so by implementing these technologies and these automated processes, allow the team to maintain their current size, maybe shrinking, but more importantly, allowing them to have the breathing room to interpret the data, create good commentary, and to be a really great financial business partner to the various teams by helping them interpret the data and think more holistically around how we can cut this data in a strategic way that tells the story that we want to tell, or helps us come up with areas of improvement for the firm. But I think data as a whole is becoming a critical component and a competitive advantage for organizations to thrive. And it starts with this whole framework overall, which reporting is an outcome, but there are so many other use cases for this data. Arthy, I don't know if you have any other perspectives from your seat.
And actually it leads right into what do we do with all this data, right? Like we see it all over, from portfolio companies to the private equity funds to going public. I mean, the data is so critical. And again, like having that standardization, having the reporting framework, the setup is really, really important. And that's where making sure it's set up, the data is mapped, everything is being in a place to be able to visibly view that data in real time, to be able to slice and dice that data into whatever reports that you need. It's absolutely important. And more we're finding, it is more the value added, like you said, that back and forth that we see between teams trying to just do the analytics, find out what's going on, like what are decisions that need to be made. I mean, when we are looking at the decision makers, the CFOs, the compliance, officers, they need this data and they need it when it's needed. They need to be able to do dashboards and just be able to make decisions. And so data is really critical. And that's where reporting systems really are important, but also how they're set up and how the data is visible is important. So I think that leads really well into the next slide, where we talk about what do we do with all of this data and bring it in. And as you've mentioned, Workiva, not only as a platform, but for this particular industry and market, the Workiva's fund reporting suite, is a place to land, if you want to call it, both from the portfolio company and all the reporting that's needed, the financial statements, the getting all the data in, all the way up to going into the funds, whether it's private equity funds or BDCs or REITs or public funds. It doesn't matter. The reporting is really, really critical. So what Workiva has been able to do is really take a look at all the teams, all the data that needs to come in, all the reports that need to be done, all the stakeholders that need to get hands on this information in different formats, and be able to report out not just into the external side where it's regulators, it's filings, or it's like just investors, or it's boards, or creating sales collateral, capital, fundraising. It is really, really critical to have that. So what we do is, as you mentioned, Jonathan, get all that as you map it, and Alpha does a great job mapping it, gets it all into a centralized point so that from that point, there's a single source of truth. Once that's there, it's not just financial data. It's not just, a couple of systems. That's usually quite a large, tech stack of systems. There's also, what we say structured and unstructured data, because we do have other external parties. We have, fund administrators, fund accounting systems, of course. There is auditors, there is like general counsel, there's, other, legal teams, there's, internal management teams that are reporting on the performance, on the on where the funds invested, the MD&A. So it is really critical to get all that financial and non-financial data all into a central repository. And of course, as you see in this box here, the financial statements is very critical. As we'll see as we go through, it's critical to have this for a period of time. As you mentioned, reporting now has become, even more. It's not just quarterly; it's like shorter time cycles. It's monthly. Sometimes it's daily. Things needed. Sometimes it's ongoing valuation opinions and letters and reports that need to be done. So financials are very important. And once the financials are there, and then the non-financial narrative, information, compliance, disclosure, tax information, all that in a central point, that data can then be linked across any different documents, reports that need to come, whether it's a presentation or it's a spreadsheet, it's an Excel, or a spreadsheet, or it is a complete, board report, or it's just a document. That data is still a data. So whichever form it needs to be connected and reported, having that central point saves that entire, as you mentioned about the gymnastics, as you called it, of teams jumping in and out, trying to copy paste, trying to send things back and forth, audit trails, version control, all that becomes actually a really, really time suck. That seems to be a big bulk, that middle piece where once you get it, what do we do with it? That gets to be very simplified. That gets to be where you should be able to make a change in one place or do a data feed that you push in real time, and it should be able to update wherever it needs to. And that's really the power of having a unified, connected platform, if you want to call it that. Workiva really uses that power of the platform to bring it to this industry and be able to really hone in on all the reports, teams, documents, processes, workflows, and have it all in one visible point to be able to deliver. And again, just making sure that all the stakeholders, whether it's internal or external, investors or regulators, all get that in a centralized manner. So that's really on the reporting piece. And I think going forward, you would have an implementation line to make sure this is all done completely smoothly, Jonathan.
Yes. At the end of the day, organizations are being asked to increase the amount of data included in their reports, shrink the timelines, and produce them more frequently throughout the year. And just doing it in Excel and Word and otherwise is just not practical, especially as firms try to increase margins and put more pressure on headcount and cost. So how do we do that? I think we've really articulated a host of successes and requirements and solutions. And, one of the reasons why I think Workiva has been so well received in our industry is because it encapsulates a few solutions in one platform. So if you look at the left side, you have your source systems. Those source systems can be from Excel, from your portfolio companies. It could be from a traditional portfolio monitoring system. It could be from an ERP system. And at the end of the day, Workiva has a built-in integration layer. So you can extract data from those systems, you can normalize it and standardize it, and then you can push it into this W data warehouse inside of Workiva. So that little central box. And so Workiva includes the integration layer, the data storage layer, and it includes the reporting layer. So while a lot of the private market funds out there and portfolio companies, they're very lean organizations, and you don't always, have the luxury of buying an integration tool, a data warehouse, and a reporting tool. And all of this is really wrapped together in one platform with Workiva that is generally business owned, that is accessible to a lot of our controllers out there. And so you don't need to rely on consultants to do everything like a lot of the traditional reporting tools. So what we do is we help work with organizations to define that data collection template. We work with many organizations in this space, so we do have a perspective, we have accelerators, and we have templates on what a best practice looks like. And then we allow our clients and we work with them to tweak them as they see fit for the nuances of their business, the types of assets they have, the industries they're focused on, and the different geographies that are relevant. And then from there, we create that integration. We figure out, whether that integration is from an ERP directly or from a portfolio monitoring system, or we're just going to collect those Excel templates. We will figure out that approach to working with your portfolio companies to get the data into Workiva. And then Workiva has a data management suite, and we can use that to consolidate all that information from the various sources into a standardized format. And again, when we look at the Workiva use cases, we can push this down to the portfolio companies, but we can also do it internally for the funds. So when you think about the funds, a lot of our clients have multiple administrators, multiple general ledgers, multiple different portfolio monitoring systems based on the asset classes and fees that they exist in. So if you're a real estate, credit, private equity strategy, you are going to have multiple sources here that need to be consolidated into a single platform. And so once that data is really solidified, we can then leverage Workiva to automate the reporting. And reporting is a very nebulous concept. A lot of times people think about reports in Excel, because in Excel you can do the drill down, the analytics, and you can also build a pretty PowerPoint type template or a dashboard, or you can build financial statements. But at the end of the day, there's a lot of risk in that. So what's cool about Workiva is we can centralize the data, and their reporting tools mimic Excel, PowerPoint, and Word with security, with the audit trail, with the integration, and the collaboration and workflow all fused together in one easy-to-use platform. And so when you do get that data collected, you can then just push it into your financial reports, your ESG, your KPIs, your budget to actual variances, your formal financial statements, your board packs, up to your investors, your SOIs, your PCAPs, etc. And so once you get that information in, there's a lot of scale and efficiency that is sort of innately produced by having a straight through process from sort of transaction entry in your accounting system all the way through to report output. And it just reduces a ton of waste and inefficiency and errors that exist in an organization today. Arthy, I don't know if you have anything else to touch on here.
No, you hit the nail on the head. I think it's also as external, auditors need to come in. The big piece of the digital review and collaboration is huge, because everything can happen, but eventually everyone needs to be able to work in, and the downtime that usually people see, like you said, when they're emailing or they have to stop and someone else has to update, then you have to manually tick and tie. Taking that risk of error out, taking the fact that it can all be done in real time in a central place with control permission. But I think the big thing we hear from a lot of customers, it gets to that very end, and sometimes you're stuck in the cycle, because people have to review, they have to send it out, and that whole digital review, being able to immediately point back if you don't know where this number is coming from, this data is coming from, to be able to go back and track that is huge.
Yeah.
So it is just not even the beginning and the middle is great, but even at the very end, sometimes that's where the heartburn is. So it really helps to have those kind of tools in place.
Yeah, and as a lot of our organizations, clients have grown through acquisition, oftentimes there's a very limited brand identity. So there's different formats, different templates, different KPIs, sometimes even different logos based on the brand that they were historically. And so an area that we have focused on is this consistency and this one brand. And so being able to have a centralized reporting team or even a reporting platform that can create a very consistent look and feel also allows for a very professional client experience and LP experience across the board.
Absolutely. Last slide now, which is really, we've talked all this time about setting everything up, being able to report, having the data. And one of the first things in the first slide Jonathan mentioned is, how do you prepare for an exit strategy, or, just, really taking all that's needed if the plan is, to go public. And in this case, get into the fund from, the PortCos to the private equity fund. Or in general, if there might be some assets, some investment entities that need to do that, some doesn't. Really, it's the journey that's important. And Workiva has, created the ease of this journey, if you want to call it, because as you heard, there's a lot of preparation that's needed. There's a lot of history that's needed too, because you almost need to have that financial statements and preparation, and also the non-financial data gathering, the KPIs, the profitability, the capital, the strength of the company. All of that needs to be done much prior, about 12 to 24 months period of time. We sometimes see where it's longer, but once you have that, again, having all that in place is important, because when it comes to the point of getting ready to do an IPO filing, go make the fund go public, get that registration statement going. If this is not there, tons of hours, money, cost, it's really a drain of resources. It's a lot of, it's a pain. It's really a pain point. And this is where being ready for it is very, very critical. So of course, if you go through the process that we've laid out, you will have all that in place. You will have audit trails, you will have trackability, you'll have history of all the statements and data and all the indicators that you need to be able to get into that stage of going public or moving it to a fund. So Workiva does have the ability to use that same functionalities that we talked about, along with other additional functionalities like Edgarizing, filing, going public, to be able to do that. So you can draft the registration statement, have the collaboration of the teams, internal, external, comment on it in real time, make edits, do black lines, and eventually, actually, it's a connected platform to the SEC. So you can Edgarize and you can file and submit the filings. There's also dedicated teams to help with that. And once that's done, of course, yes, the fund is launched or the company goes public. And then what do you do? Well, it doesn't end there. There's ongoing reporting that's required. There's ongoing governance, risk, audit that needs to be done. And this is where it takes the journey from pre-IPO or pre-public to post-public, or eventually getting into a fund. And this is where you can get into all the regulatory reporting that's needed. So, of course, we have all the financial, but also on the regulatory reporting side, there's several different filings that happen. There are several different reporting that needs to be done. Investor, needs that need to be met. So any follow-on offerings, secondary offerings, all of that comes into play. And this is where the journey continues post IPO, whether it's the 34 Act, the 40 Act, all of that requirements. The platform just continues on. But the nice thing is, the teams are familiar, the data is already there, the progression is there. It's a very easy transition, and it ensures complete transparency, and you are prepared. And honestly, like, I cannot tell you how many times people have said, if this, and we've seen people both sides, the ones who have been prepared and go through this journey, and the ones who are not and come to us at that point of either right at the brink of going public or launching the fund, or right after. And it's definitely better to have a seamless journey. And Jonathan, you've done this several times, so I'm sure you can add some color to this journey.
Yeah, most people are scrambling when it's too late, but I think the Workiva platform is just seamless and a push button approach with the services and solutions that come with it.
Yep.
Thank you very much. I'll hand it over back to Justin to wrap us up.
Yeah, actually, I think we have some space for some closing remarks. Arthy, why don't you just go ahead and close us off there before we get to Q&A?
Yeah, absolutely. So I think really in terms of closing remarks, we've seen the companies that take that step to do this kind of finance transformation or digital transformation, you want to call it. But honestly, it is just the fact of saying, like, I just want to automate my processes. I want to have transparency to my data. I want to be able to do value added tasks. I want more analysis. I want more value added tasks for my teams. And how do I do that? And honestly, the sooner you can embark on that journey, you do see, it really does pay off in the end, not just in hard dollar cost savings, but honestly in the teams, the talent that you can retain there, the really impactful metrics, as you can call it, that, ROI that they see. So I would say that even if it means, it doesn't have to be all at once, but even a phased approach into moving to this kind of automated reporting is really key. So I would encourage anybody who is on that, want to move forward and scale, or just thinking about it, to absolutely embark on the journey.
Great. And Jonathan?
There's really no better time to start than today, because your data is going to be increasing, and it's never going to be easier. So trying to take incremental steps and be intentional to think about how data should come together does not require a large technology investment, regardless of how big or small you are as an organization. But being thoughtful, getting people across the organization and each of their functions to be aware of how data is impacted across the firm, and think about how each of the technology solutions in and of themselves will support and should support a common reporting framework is essential. And I think a lot of these solutions are really sort of straightforward to implement, and the organizations are generally required inevitably to do something like this over time.
Well, excellent. Thank you so much. We do have about 6 minutes left, and there has been a few questions that have come in. If you do have a question, you haven't asked it, you go ahead and click the Q&A button and type it in there, and we'll see if we can get to it. But yeah, let's just go ahead and spend the last couple minutes answering a few of the audience's questions. So the first one is, and I think, JB, this was meant for you. What specific metrics should we prioritize in performance reporting to drive the most value for portfolio companies?
I think there are a few key ones like revenue, expenses, headcount, EBITDA, various cuts of margin percent, gross profit, net profit, EBITDA margin, and then forward-looking indicators, trying to do a probability weighted forecast of your pipeline and how well that aligns to your ability to hit your targets. So there's a lot of forward indicators that might vary based on the type of company you're in. And I think that's sort of key, is trying to be able to get that information. There is more of a demand for data, trying to understand your wins, your losses, how long days are in the cycle. Things like that are becoming more and more commonplace for people to be able to connect and stitch together.
Excellent. Excellent. Cool. So the next one, Arthy, I think it's more for you. And, I think this is a common challenge, right? So I'm the CEO of a portfolio company you've just bought, And, you're asking me for all this data, and it's, there can be some pushback, right? Like, so how can we balance the need for detailed financial reporting and performance reporting from those portfolio companies without risking like overwhelming them, those management teams?
Absolutely. Striking that right balance between robust reporting and operational burden it's a challenge most firms face, private equity or not. I mean, most firms face that. I think the key is to prioritize signal over noise. So start with aligning on the core set of, the value driving KPIs, financial, operational, strategic, that are consistent across the portfolios, and start with that. So prioritizing that, I would say, is the first thing. And I think second, I mean, technology plays a huge role. So, with like automated reporting platforms, I mean, like we talked about Workiva, of course, but it helps to streamline that data collection, reduce that email back and forth, connect directly. So just reducing that manual work for, PortCos and the funds, really just means more real-time accuracy for the firm. So I think ultimately it's trying to make reporting a value add and not a compliance burden. So just focus and prioritization, I think, is key. And once the teams all realize, like, the amount of time that they're saving and on just the, non-value added or manual tasks that has become kind of routine, but now it starts clearing up, they do see the value.
Mm-hmm. Okay, excellent. All right, I think this we still have a couple minutes. Let's do one more here that came in. I think this is probably for you both. But Jonathan, we'll start with you. What are some common challenges, I think more from a technical aspect in implementing robust systems like we're talking about here across the portfolio companies, and how can we overcome those challenges?
I think it's around good communication and education, and trying to meet them in the middle where they need to be, and making them understand. Yeah, it's the communication about making them understand that we all have a job to do. Usually during the process of a portfolio company, they will include this sort of pack so people are aware that it's coming. And I think that just intentional relationship is a core competency to make this successful.
All right, excellent. Well, I see we're at the top of the hour. I want to thank everyone for joining. There is one more question that I think is really important, and it's how do I start? So, Carly, if you can pull up that contact slide again, that'd be great. It would be to reach out to us. Reach out to us at Workiva, reach out to us at Alpha FMC, and we'd be happy to talk with you about getting started and improving your process here. I want to thank both Arthy and Jonathan for their engaging presentation today, and of course, all of you for attending and viewing or viewing the recording at a later time. To find out more, please reach out to Jonathan. You see his email address there, and our Alpha FMC website, as well as Arthy's contact information at workiva.com. Go ahead and visit those sites. We'd love to hear from you. Otherwise, that's it for the webinar. We really appreciate your time. Thank you very much. Have a great rest of your day.
Thank you.
Thank you.